Hello, welcome to Nebby Invest. So you'll notice if you've been an avid viewer of this video series, you'll notice some subtle changes I've made to the opening slide. So not only have I changed it from a blue hue or tinge to white, I've also changed the title. So instead of Neppy's MSP portfolio, I've completely changed it to just Neppy's portfolio. That is sort of a clue that my investing strategy has changed in the past week. So these are the significant changes I've made to my investing strategy. So when I first started investing about 10 years ago, or over 10 years ago now, my main focus was on finding companies to hold for the long term, hoping those companies' value and share price will grow in that period of time. And I was not really concerned about the short to medium term fluctuations in share price. But the really good thing about me, and this is not true for everyone, but the really good thing about me is I always question things. I always say, is this the right thing to do, the right way to invest? I just don't stick solid to that. Don't believe this is the best way to invest. So I was trying to reading up on alternative ways to invest. So naturally I went to technical analysis and I bought some books, started reading up on technical analysis, not really knowing if this was a good way to invest or trade or anything like that. And I still remember the day where it all clicked together. It was a company called M2 Communications, I forget the codes. They were eventually bought out by Vocus, if I remember correctly. But anyway, this company was profitable, PE ratio of about 12, share price was going sideways. No one was really talking about it. Remember that show, Your Money, Your Call? No one was talking about it at all. They were just talking about other, internet companies. And I was just wondering why. And then one day, the share price popped up on high volume. I can't remember why. And then from then on, the share price just kept on going up and up and up. And I bought on that day this company. And then all of a sudden, this company started to be talked about on Your Money, Your Call. So the first clue about the shift in sentiment and the shift in the share price trend was this one day, a large increase in volume, large increase in share price, and that was that. So that was sort of the first indication that technical analysis can work, and that the importance of sentiment and human psychology when it comes around to the movement of share prices. So I started to do that sort of strategy more and more over the next few years, and every time I did it, I was successful. And in fact, if I kept following that strategy, I would have been even more successful. For instance, I bought Fortescue Metals at about $3, then I sold out at $6. If I just kept holding Fortescue Metals, I would have made a killing. And there were significant examples like that, where if I just followed the momentum sentiment strategy, I would have made a killing. But anyway, so my investing strategy has just evolved from a long-term growth portfolio, thinking that is the best way to invest, to a more of a momentum sentiment way of thinking. And in August of 2020, I decided to set up a portfolio tracking this momentum sentiment strategy. And over the past 6 or 7 months since I started this portfolio, the performance of that strategy has significantly outperformed not only my other portfolio, but also the market at large. And I'll show you some numbers in a second or so, in a few slides. So what I've decided in the past week is consolidate both my portfolios into the one portfolio, Neppy's portfolio, and just focus mostly on momentum and sentiment. So all my holdings in my long-term growth portfolio will either eventually be sold out or be transferred to my momentum sentiment portfolio, and I just have one strategy I'll be implementing in the future. So before I get into the changes I've made and looking at the performance of the portfolio and some companies within that portfolio, just talk about the overall market and look at the XJO. Now, since about middle of November, the XJO has been trading in this channel, upward sloping channel. It's quite good. And every time it gets to the top of the channel, we do see sell-off. And every time it gets to the bottom of the channel, we see some buying coming into the market. And right now, at the end of closing on the 26th of February, we're right at the bottom of that channel. So hopefully, we'll see some positive market action come into the XJO and the Australian markets in the following trading week. I can't remember right now offhand what happened in the international markets overnight, but the futures were up last time we looked for the XJO. So last time we saw the market down at the bottom of the trading channel was in late January, and we did see some bullishness come back into the markets. Hopefully that's going to be at play again in the next trading week. So overall, the XJO was down 1.8% for the week, which was all because of the last trading day. The XJO was down 2.3% on Friday. So as I mentioned before, I will be making some transfers from my long-term growth portfolio into my momentum sentiment portfolio. And these are the first two transfers I will make or have made. And those two companies are Arris Resources and TPC Consolidated. These are two companies I bought in August of last year when I first started the momentum sentiment portfolio. And these companies, two companies, have performed really well over that time span. In fact, they're both up over 120% since I bought into them. Now, Arris Resources, I bought them because they did an acquisition of a mine, and that acquisition has been highly successful. They released the half-year results last week, and it was really good, and the market reacted quite positively to those results. And I actually did a video yesterday, the 26th of February, so have a look at that video if you're interested in this company. So I've decided to transfer this company through to my momentum sentiment portfolio. So I'm not going to be tracking them based on the price I bought. I'll just track this company when I've transferred through, which was at 12.5 cents. TPC Consolidated, I did a video on this company in August or September last year. I called them an obscure stock, and they're very obscure. I doubt many people out there watching this video have heard about this company. Now, they're a very highly illiquidly traded company. Now, when I bought them at 95 cents, we started to see a little bit more volume come in, which was really bullish. I want to see that sort of thing, more volume, because more and more people are becoming interested in this company. So I bought them at 95 cents just before they released their yearly results. And based off the yearly results, they decided to give out an 8-cent dividend, which was really good. That's almost a 10% yield. I think it's an 8%, 9% yield. And then over the past about 2 weeks, the share price of TPC has just been going up and up and up and up and up. I'll show you the chart in a few slides or not. And right now the share price is $2.10. They released their results after the close of trading on Friday, and I just went, wow, when I saw these results, and they've issued another 8-cent dividend. So this is 16 cents of dividends for a company I bought at 95 cents. So that dividend yield, you can work that out yourself. That's over 16% dividend yield for a year. And this is the interim dividend yield. They could actually have a higher full-year dividend yield. So anyway, this company's share price is up 121% since I bought. So both these companies, I'm fairly bullish about the short-term, medium-term movement in share price, and that's the main reason I've transferred through to my momentum sentiment portfolio. So how has this portfolio performed over the week when the overall market was down 1.8%? So for the third week in a row, when the overall market has been down, my performance of my portfolio has been up. So instead of down 1.8%, my portfolio had a gain of 1.3%. And the last two updates, last 2 weeks, the best performing company has been ZipPay, or Zip, which was up quite a bit this week. It was worst performing stock. You see that a lot. When a company really outperforms the market over a period of time, typically then it sort of underperforms the market. We definitely saw that in the past week. It was down almost $1,000. And Smart Group down $237, which was slightly surprising because the market really liked the results they gave on Thursday, the 25th of February, but then because of the big down day on the Friday, it lost all those gains it made on the release of their results. The best gains of the week, 2 of these companies released their results and the market has liked them. That's Costa Group and Dusk, up $620 and $500. And Hanna Metals still performing quite well, up $550, and that is probably my largest, it's my largest gain as of now, is up 67%. Zip still up 65%. Dusk up 50%, and BlueScope still hovering around there at 35% gains. So here in this slide, what I am comparing is my portfolio's performance to a benchmark, and I've used a benchmark, the STW, which is an ASX 200 ETF. So why am I using this ETF? Well, I have been told numerous times since I've been doing these videos that I just put all my investments into ETFs, particularly the ASX 200 ETF, because I cannot outperform the market. And they tell me research has shown that no individual investor can outperform the market, and that's complete and utter bullcrap, and this should be some sort of proof for you. In my opinion, now this is just my opinion, I believe they're thinking about managed funds, and there is proof that managed funds tend to underperform the market. But as an individual investor, I have significant advantages over managed funds. So I want to be outperforming the market because I just don't like ETFs, because ETFs mean that I'm going to underperform my expectations. So I expect to significantly outperform the market because of the advantage I have over managed funds who tend to just slightly underperform the market because of fees they have. And this should be significant proof of that, particularly if you're an active investor. So if you don't like to be active, if you just want to be passive, I suppose ETFs should be okay. But if you do ETFs, your overall performance is going to be lacking compared to if you're a little bit more active. So what I've done here is I looked at the performance of my portfolio on different time scales: 1 week, 1 month, 3 months, and since the portfolio inception, which is about 6 months ago. So over the week, we've already looked at the comparison between the performance of my portfolio and the benchmark over the past week, and it is higher. I've been positive. The overall market was down. Over the past 1 month, my portfolio is up 7%, and the overall market, or the STW, is down 1.7%. Over the past 3 months, my portfolio up 15.6%, and the STW is only up 1.3%. And since the inception of my portfolio, my overall performance has been 25.8%, and the STW is up 10.5%. So I've taken this from ShareSite. So this includes all the transactions I've made, all the companies I've sold or bought, and even includes dividends. So the dividends of the STW is actually outperforming me. So I'm not in this for dividends. I'm in this for capital gain. So at the moment, the performance of my portfolio is 2.5 times the overall market, or the STW. So why would I put my money in an ETF when there's no significant gains in that sort of strategy? That is my philosophy. That's why I very rarely buy ETFs. I do have one ETF, but I rarely buy into ETFs. I believe ETFs is only for those who don't want to be active. They just want to be passive. But if you do that sort of strategy, you have to be satisfied with market average returns. That's all I can say. So the first company I transferred is Arris Resources. I've already done a video on this company yesterday, so have a look at that video. And I initially bought this at 5.6 cents in August or so. And really the share price has been going up ever since then. It was a period of consolidation there for a while when I held it for about 2 months or so, where the share price just went sideways. But really good share price appreciation from October through to January, when the share price went from about 6 cents all the way up to 12 cents. We saw a bit of weakness in the share price because of gold, because this company is a gold and copper producer. That do mine those two commodities, and we saw the share price go all the way to 8 cents. That would have been a real good buy, because the results were going to be pretty epic, and the results were epic when they released it a few days ago. And we have seen a share price break out potentially at above 12 cents, and that's why I've decided to transfer this company through to my portfolio. The second company I transferred was TPC Consolidated. Now, I initially bought this at 95 cents back in August again, and just before the full year results which were released. And the main reason I bought this company was the volume increases. This was a highly liquid company. Before I bought it, they saw this volume came in. So market saw something exciting about this company. And when they released their full year results in August of last year, the market really loved it, and the share price went from 95 cents all the way up to $1.60 in a very short period of time. Then we saw a very weak selling for about 2 months after it. The share price got as low as about $1.10, and then ever since then it's been slowly going up. And then over the past about, we'll say 2 weeks or so, there has been a little bit of volume coming into the market, and that's driven the share price from $1.40 all the way up to $2.10. And they've just released their half-year results on the 26th of February at 4:28 p.m. after the market had closed, and the results looked really, really, really good. And they've also announced another 8-cent dividend. So this is an interim dividend, so there is potential for this to be a very good dividend yield play. Now let's talk about the best performance of the week, and this best performer is Costa Group. I've held this since their half-year results in August released there. They're fairly bullish about their short to medium-term future of the company. Management were. Some people say you don't always believe what management say. Well, I tend to disagree with that, because a lot of times management, you can tell what they're thinking in some of the wording they're saying. You can definitely see that Costa Group management were very bullish when they released their half-year results in August of last year, and the share price did break out and has been going up ever since then. So if you bought in at $3.20 around about that time, you've made fairly good money since then. The release of their 4-year results start of the week, and it looks like another breakout above $4.40, and the share price has stayed above that. You can see the share price was trading in a range between $3.80 and $4.40 since about November last year, and every time it went to the bottom of that range, it was buying. Every time it got to the top of the range, it was selling, and now it's broken above that trading range. So it looks looking quite bullish for the short to medium term for Costa Group. So next best performer is Hanna Metals, and this company, I've talked about this company a lot. I bought this company just after a breakout in the share price. Share price rose over 100% in one day, and the next day I bought it 7 cents, and the share price has been going up ever since then. There's no reason for me to sell this company just yet. I think if you lack the patience, you would have sold out in Hanna Metals a little bit too soon. We saw a breakout above 10 cents about a week ago, and it's continued above 10 cents since then, so that's very bullish. And I'll look at the 1 hourly chart in the next slide, and that even looks even more bullish. So I do think there's going to be some news flow in the future around this company, and if that news flow is quite positive, we could see a significant appreciation in the share price. That's not a guarantee, but there is that potential, and that's why I'm holding this for the short to medium term. So here is the 1 hourly chart for Hanna Metals, and you can see that breakout, 10 cents. So I've got this brown line right on 10 cents, and 10 cents is naturally going to be a resistance price point for any company. All companies struggle to get above 10 cents. I think it's just because the incremental change in share price below 10 cents to above 10 cents. There is a change. It goes in from increments of 1.1 to increments of 0.5 once it gets above 10 cents. It broke above 10 cents on high volume. You can see that high volume, that tall green bar, and that's a significant sort of breakout. That's the sort of breakout you want to be sustainable, and it was sustainable. In fact, the share price went from there all the way up to 15 cents, and it's been retracing back on lower and lower volume, and that's actually quite bullish. So we can see the share price rising on high volume, it's coming back on low volume, and again, that's very bullish. The next company I'll be looking at is Dusk. So the whole reason I bought Dusk at the end of December was a really positive announcement from the company, and you can see a breakout with this release of this announcement on high volume. This is the definition of a breakout, particularly when you see the share price performance after the release of this announcement. Some people won't buy in on this sort of breakout because they always believe gaps fill, and this should be proof that that isn't always the case. Share price has gone from $2 and all the way up to $3. So it's almost been a 50% gain for this company. I think I bought in at $1.98, I can't quite remember, on the day of the release of the announcement. I don't always buy on the day a company releases a positive announcement. I sometimes wait to see what the market reaction is in subsequent days. But with this announcement, I bought on the day. And I've put in there a sloping brown line, and that's the uptrend. And the obvious sell signal for this company is it falls through that uptrend lines. So that's what I'll be waiting for in the future. They released their half-yearly report a few days ago on, I think it was a Thursday, and the market did react quite positive to it. Even on the Friday, with the overall market sell-off, it didn't really go down all that much at all. So very positive performance. Dusk almost up 50% in my portfolio. The next company I'm looking at is Packgrove. This is a company I've held in the past, but without doubt, this is another breakout buy. You can see the release of the announcement was on the 17th of February. You can see that first up green bar before it broke out the next day. And ever since it broke out above $2.80, which was a really good resistance level, its share price has just kept on going up. So I bought it on that breakout. You can see massive volume coming into the share price as well. And that's really bullish too, because no doubt that's a lot of fund managers who saw the results and went, oh, this is really interesting. The outlook from the company is good. This is a good buy. And I think that's why we've seen the share price really outperform the market over the past 6 or 7 trading days. Now to my worst performer for the week, and that is Zip. So again, I bought this company on a breakout, and there's a sort of a common theme with all these companies I've been buying. There's always this sort of breakout, typically associated with a very positive announcement from a company. Now with Dusk, I bought on the day of the breakout, which I don't usually do. With Zip, it's even more unusual that I bought at the opening auction, because when I read the announcement, I went, this is very bullish, and I think the market is really going to react very strongly to this announcement, and it did. But there's a bit of risk to that, because even though the market can open quite positive to announcement, they can react quite differently during the day. And we've seen this with quite a few companies that have opened quite highly on the release of the half-yearly results, and then by the end of the trading day, it's down quite a bit. We saw that with, I think it was Self-Wealth. It was up 5% at the open and finished down 10% by the end of trading. So there's always that slight risk that the market is going to see this a little bit different than you do. But on this day, this particular instance, it was not like that. You can see that green bar, because the top of that green bar, there's no tail at the top. That means the share price closed at the high of the day, and that's very bullish. And you can see that with the continuation of the share price rising over the subsequent month or so, and the share price got to a high of $14. Bit of weakness in the share price over the past month. It's gone from $14 to about $10, and it's bounced off above $10 quite well. So hopefully it stays above $10. Now to a potential buy that I had on my list last week, and that is Treasury Wine. A very interesting situation we're seeing unfold here with Treasury Wines. Now, the reason I put this on my potential buy was a breakout in the share price above a really good resistance level of $10.60. You can see I've got that line, that horizontal line, which is the resistance level, or was the resistance level. If you go back to November, it hit that $10.60 and then pulled back on good volume. And then again in the start of February, it got to $10.60 and then pulled back on good volume again. So that $10.60 was a very powerful resistance level. If it broke above that, that would be quite bullish sign. And it did that on the day after the release of their results, which is fairly unusual in itself. You would have thought the price movement of a company releasing their results would be the day they release the results, not the day after. But the day after they release the results, the share price just moved through $10.60 without any effort at all. It was high volume, and the share price increase on the day was something like 12%. We have seen a bit of weakness in the share price since then, consolidating. Now, the share price got to a low of $10.61 2 days after that breakout. I put in a bid at $10.60. It just didn't hit my bid. So that was fairly disappointing. That I almost got hit, but it didn't quite. So share price is $10.90 now. So potentially I will buy into Treasury Wine over the next week or so, particularly if it goes back to $10.60 or so. But I might just put in a bid, say $10.90 or so, if the share price doesn't get to a bid of $10.60. So that's all for update 14 to Nepi's portfolio. Hope you've enjoyed this video. If you have any comments, leave in the comment section now. It might take me a while to answer any comments you have, but I will be interested to see if you like this sort of strategy, you don't like it, and any reasoning or any arguments in favor of your thoughts. Otherwise, I'm not a financial advisor, so even though I do or have this strategy, it doesn't mean you should follow this strategy. You should find your own light, find your own strategy that suits your own personality. And just because I found this sort of strategy won't work for everyone. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's all for this video. Have a good day. Bye.